Hey traders, Stephen here with thetradersplan.com. It is Friday morning, January 21st. We're going to look at the overall market, and then we're going to look at some top ETFs of the week, as we always do on Fridays. So let's really dive right into it. You'll have to excuse my voice. It's been scratchy for a couple weeks now. I'll start with the NASDAQ. This is looking pretty brutal. The NASDAQ is down 13% approximately from its high. It's really breaking down. Growth stocks are, and I probably didn't draw that just absolutely perfect, but you can draw it right there. You can see that. I mean, it really looks like a rounding topping formation, and it's starting to break down. It tried to bounce off the 200-day moving average last week, and then it just completely failed. This is probably pretty healthy, and I know no one likes the market to go down, but the reality is when the market gets really choppy, right? You made a lower high right here, couldn't clear this, and it gets really choppy and it gets really hard to trade, right? Swing trades are getting picked off and all that stuff. Sometimes you really just need kind of that just wash out low, right, to just really kind of shake everybody out and get the buyers back in. Now, it's incredibly important. We don't know when that's going to happen. Could happen today, next week, next month. I don't know. But it's really important to understand that strong rallies come out of ugly markets, and if you mentally are not in a good place because you had a bad month or a bad quarter or whatever the case is, then you're going to be gun shy on that rally whenever that comes. And again, we don't know when the buy signal will work, or when we'll get that rebound, but they're usually pretty strong. So just kind of keep that in mind. Whatever the first quarter of 2022 presents us, we're still going to likely have some strong rallies this year. Okay, and it's important that you are mentally ready for that. And in addition, it's also important for you to make sure you're trading position sizes that are appropriate. When the market is getting challenging and you're losing more than you're winning, or let's say you're even breaking even, or whatever the case is, you need to be trading a position size that doesn't frustrate you if you have a string of losses, because that can cause other mental errors. And right now, when the market is going down or it's challenging, the goal is to lose as less as possible. All right, so protect your financial capital, but it's also important to protect your psychology, right? Your brain capital. That way you're ready on the next rebound. So, if you're trading 1% per trade, maybe dial it down if you haven't already. I think position sizing is incredibly important, especially when you have periods that aren't going your way, right? Like, I mean, the NASDAQ growth stocks have not really had a fun 3 months or so. So let's look at the S&P 500. Now, the S&P 500, it is kind of right at this level. It broke it yesterday, and it's going to open right around the 200-day moving average. So again, we don't know if we're going to get kind of that washout low, right, where it does something like this and then gets out of here, or if it's going to stop right here, or whatever the case is. Just be flexible, and again, trade a position size where if you lose on a trade or a couple of trades, you're not getting angry at yourself. Okay, if you're finding yourself getting angry, then you're trading too large. Okay, so let's look at the top ETFs of the week. I want to start with what ETFs were up yesterday, and then we'll look at the top ETFs of the week. So yesterday, I don't really care for the China ETF, because I think they're probably eventually all going to go to zero or go back to China. So I almost just want to delete that ETF entirely. But you really had some emerging markets pop yesterday. The China ETF really popped, and that's because China had you had a rate hike in China, a rate cut in China, so that caused a bunch of the emerging markets to pop. And China kind of scares me a little bit, just based on they can snap a finger and do whatever they want. But Brazil is looking interesting. And when I talk about, now make no mistake, if the market continues to get hit, emerging markets are probably going to get hit just as worse, if not more. But you had something different happen. You have this Brazil small cap ETF that went from 21 to 11, right? Almost got cut in half. this orange line, this nice little downtrend, it keeps rejecting, and then it kind of broke through yesterday. Now, in pre-market, the market is falling, so I'd expect this to come back down, but don't be surprised if this does not make lower lows and just starts to try to come around and back here. So what I would say is, for something like this that's probably going to fall today, you can always let it fall and keep an eye on it, keep on your watch list, and if it breaks back above Thursday's high, that could be a nice entry with a tight stop, right? Because then all of a sudden you have a personality change in Brazil. So there is one idea to really consider. Let's look at let's look at what's up the current week. So Brazil is at least worth a watch list. I'm probably going to recommend just holding off on, but just absolutely buying anything. But precious metals really led this week, and you had platinum and palladium really, lead the way over silver and gold miners. But you have a nice bottoming pattern. I mean, this palladium looks like an inverse head and shoulder pattern. You can see it right there, but it hasn't broke above the neckline. And most of the precious metal ETFs are still looking pretty weak, right? The chart still looks bad. So I would just be incredibly cautious, but I would start to pay attention to see if some of the precious metals can wake up and catch up, because energy has made a really nice run the last 6 weeks. I've participated on it as well, and that's really helped balance things out nicely. Energy is probably likely to pull back now, and so now if we continue with this inflationary environment, what is trying to play catch up? And at least this week you have palladium and platinum. You can see that this chart still looks kind of ugly, right? It's still under the 200-day moving average. There's nothing really good about it. So I would say if this pops up again in the top 10 next week, then I would start to say, okay, this looks interesting. For now, it really doesn't. We can look at silver miners, and you can see, even though silver miners had a massive day on Wednesday, up 9%, this chart looks ugly as all get out. Right, it's just nothing good about it. There's nothing bullish about it. It could wake up, and it looks like it might, but for me, I want to buy strength, not weakness, or buy at the bottom of some downtrend, hoping to really catch it. This isn't a downtrend. The 50 is under the 200-day moving average. You can see right there. So just keep the metals top of mind, but they don't look quite ready yet to make a meaningful move. That doesn't mean they can't bounce a little bit, but I'm saying to make a meaningful move like energy has. So right now, in my opinion, so far what I've reviewed, I'm thinking Brazil looks the most interesting. If we look at what's up year to date, like the last couple weeks, energy has really dominated. You have this IEZ ETF that is they're kind of all looking like they're ready to pull back, right? They made a nice move from 12 to 16, and now they're kind of looking like they're ready to pull back. This IEO I did trade, and I bought it as on this day right here, as it was really breaking through the 50-day moving average, breaking through this inverse head and shoulder pattern right there, kind of a mini. And it made a nice move, and I booked some profits along the way, and now that the energy is looking to pull back. So I would really, with energy that has so far led year to date, I'd really keep an eye on energy and see if it can a lot of these ETFs can really pull back kind of close to this support range and see if they find support. Oil is at $85 or $84 pre-market. That's pretty high. But that doesn't mean it can't go to 100 or 120, and I know that sounds crazy, but trends persist, right? So we'll kind of keep that top of mind. But energy is still the strongest year to date, but is looking in need for a pullback. So I would really look at some of these energy ETFs or even some of the energy stocks and try to find a nice level of support. And I think IEO, right, this level right here is a nice level of support that I would at least look at. If we look at, some of the more popular ones like XLE, it's a little bit more extended, but this is really market cap weighted. But again, you can see this 50-day moving average is also right at the neckline. So it's got a ways to fall, right? It could fall 10-15%, but I would really pay attention to see if this support can be put in, because oil and energy might need that pullback, and then it might provide just a really nice opportunity to take a second leg, because even though energy has been really strong the last 6 weeks or so, and it could be the leader this year, that doesn't mean it's not going to have pullbacks and corrections and consolidations along the way. So another one I do want to acknowledge is copper. It is, something I've been looking at, but it is just really right at a major consolidation, at a major pivot. And it popped a couple days last week, and it's kind of just trying to grind its way through this $40 level. And you have a major, right? This has been consolidating since May of last year. I would call this consolidation pretty significant. So if it clears 40 with conviction, which right now it's kind of grinding its way through that level, maybe the market sucks it back in, but you can see the relative strength line is rising, which means it's outperforming the S&P 500. I mean, if this starts to get going, I would slap a buy rating on this with the stop under last week's low, just really tight. I think anything you trade right now, you need to take small position sizes. That way, if you're risking 0.5% per trade and you lose 4 in a row or even 3 in a row, you've only lost 1.5% of your portfolio. That should hardly upset you, right? That's just part of it. So that's the kind of money management and trade plan rules I'm talking about. So, but copper has really been showing some relative strength the last 2 weeks, even though it really hasn't gone gangbusters yet. But there's some individual copper stocks that I'm looking at. So let's kind of recap. With the overall market, I would say let it do its thing, whatever it wants to do. I probably won't buy anything today. See where the market opens on Monday. See if the S&P 500 holds the 200-day moving average. In summary, trade small position sizes if you decide, to trade in the next several days, right, or the next couple of weeks. We're in a more volatile market, and I want you to make sure that you're protecting your downside as well. Energy is looking for a pullback. Brazil is setting up pretty nicely, and copper is setting up pretty nicely. So I would put those at least on your watch list. Let's see what the overall market does, and then we can really go from there. I hope you have a great weekend.